Right now, Bonk is trading at approximately $0.4023. And trust me, this price level is no accident. We're looking at one of the most textbook technical setups in cryptocurrency, a Golden Pocket Fibonacci bounce that's got institutional money taking notice. For those new to my channel, I'm diving deep into altcoin analysis that the mainstream crypto YouTubers won't touch. Today, we're dissecting Bonk's price action using Elliott Wave theory, Fibonacci retracements, and volume profile analysis. This isn't financial advice, this is pure technical warfare. Bonk just completed what appears to be a classic ABC correction pattern. And the bounce we're seeing from the Golden Pocket zone, that's the 61.8% to 65% Fibonacci retracement level, is textbook bullish continuation setup. But there's a catch, and it's bigger than you think. Since July's peak, Bonk has been consolidating like a coiled spring. Volume has decreased significantly, which actually strengthens the bullish thesis. Lower volume during consolidation typically indicates that weak hands are getting shaken out while smart money accumulates positions. The daily chart shows Bonk holding above critical support levels near $0.4020. Both the 7-day and 25-day moving averages are providing dynamic support, while the 99-day moving average acts as our long-term structural foundation. But the real game changer? Coinbase just listed Bonk as eligible collateral for perpetual futures trading. This isn't just news, this is institutional validation that most retail investors completely missed. Now this is where it gets interesting and slightly terrifying if you're short Bonk right now. Elliott Wave theory suggests we need 5 waves to complete a full bullish impulse. Bonk has already completed what appears to be a 3-wave corrective bounce. That means we're potentially sitting on the launch pad for waves 4 and 5, the explosive waves that typically deliver the most aggressive price action. The Fibonacci extension targets are screaming at us. 123.6% extension sits around $0.4035, while the 161.8% target, the golden target that technical analysts dream about, lands near $0.4050. That's more than a 100% move from current levels. But wait, there's more technical confluence building that most traders are completely ignoring. The Golden Pocket, that 61.8% to 65% Fibonacci zone, has acted as support more times than I can count in crypto. Bonk bounced from this exact level, confirming another higher low in what's becoming a beautiful ascending structure. Look at this pattern. Higher highs, higher lows, textbook uptrend continuation. The market structure is practically shouting buy the dip to anyone willing to listen. The volume profile tells an even more compelling story. Those intermittent green volume spikes during consolidation, that's not retail FOMO, that's smart money accumulation. Someone with deep pockets is building a position while retail traders panic about Memecoin volatility. Right now, Bonk is fighting for control of a critical resistance level, the point of control from previous trading sessions. This level acts like a magnetic force in the market. Break above it with conviction, and we're looking at an acceleration toward daily resistance levels. The scary part? If this breakout fails, Bonk could retrace to deeper Fibonacci levels, potentially testing the 78.6% retracement around $0.4018. That's a 22% drop that would liquidate over-leveraged long positions across the board. The volume profile is setting up for fireworks. We need sustained bullish inflows to validate this breakout attempt. Without proper volume confirmation, any move above the point of control risks becoming a bull trap that could savage retail traders who chase momentum without proper risk management. Historical price action shows that Bonk typically accelerates after reclaiming key levels during expansion phases. The pattern is repeating, but will history rhyme this time? After analyzing multiple time frames and confluence factors, the probability matrix is honestly leaning heavily bullish for Bonk. The Golden Pocket bounce, combined with Coinbase's futures listing and the Elliott Wave structure, really creates a technical, perfect storm. Point of control breakout is at $0.4028, which is about a 22% upside. The daily resistance level sits at $0.4035. That's a 52% upside. And the Fibonacci extension at 161.8% lands at $0.4050, giving a whopping 117% upside. For risk management, the support zone is at $0.4020 to $0.4021, and the invalidation level is at $0.4018, which is the 78.6% Fibonacci. Coinbase's decision to list Bonk as futures collateral isn't random at all. Institutional traders just don't touch assets without proper technical setups and solid liquidity profiles. This listing actually provides the validation and infrastructure needed for those larger capital allocations. The expansion of the derivatives market adds yet another layer of bullish momentum. When institutional money can hedge positions and create leveraged exposure, it typically leads to increased volatility and honestly, even more importantly, sustained directional moves. The timing really couldn't be more perfect. Bitcoin is showing signs of strength, Memecoins are rotating back into favor, and Bonk's technical setup is, well, pretty pristine. The combination of reduced selling pressure, institutional backing, and these textbook technical patterns creates a high probability scenario for some significant upside. While Doge and SHIB trade sideways, Bonk is quietly building the foundation for its next major leg higher. Sometimes the biggest opportunities hide in plain sight while everyone's looking elsewhere. For traders considering exposure, the risk-reward ratio is compelling. Entry near current levels with stops below 0.000020 USDT offers a 2-to-1 risk-reward ratio to the first target, and potentially 5-to-1 to the full extension target. Position sizing becomes critical here. Bonk's volatility can destroy over-leveraged accounts, but proper risk management could deliver substantial returns if this technical setup plays out as expected. Bonk stands at a critical inflection point where technical analysis, institutional validation, and market timing converge into a potentially explosive setup. The Golden Pocket bounce confirmed another higher low, the Elliott Wave structure suggests more upside potential, and Coinbase's futures listing provides institutional infrastructure. Whether this translates into the parabolic move that Memecoin enthusiasts dream about depends on one thing: volume confirmation above the point of control. The next few trading sessions will determine if Bonk breaks out toward new highs or retraces for another accumulation phase. Either way, this setup deserves attention from serious cryptocurrency traders. Drop a comment below with your Bonk price predictions, smash that like button if this technical analysis helped clarify the setup, and subscribe for more deep dive cryptocurrency analysis that goes beyond the surface level content flooding YouTube. Cryptocurrency disclaimer. This content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments carry significant risk, including the potential loss of principal. Bonk and other cryptocurrencies are highly volatile assets that can experience dramatic price fluctuations. Past performance does not guarantee future results. Always conduct your own research, understand the risks involved, and never invest more than you can afford to lose. The technical analysis presented reflects current market conditions and patterns, which can change rapidly. Consider consulting with qualified financial professionals before making investment decisions. Trading cryptocurrencies involves substantial risk and may not be suitable for all investors.